Hello everyone, I'm Daniel Masuda Lehrman, your fee-only financial planner based out of Honolulu, Hawaii, and serving clients virtually nationwide. Today I'm excited to bring you a comparison of the three biggest names in the investment world, Vanguard, Fidelity, and Charles Schwab. I've had the unique opportunity to work at all three of these firms, so I'm here to offer an insider perspective on what sets them apart and what you should consider when choosing between them. Whether you're a seasoned investor or just getting started, understanding the differences between these financial giants is essential for making informed investment decisions. Let's jump in and break it down. First up is Vanguard, where I actually started my career and earned my Certified Financial Planner designation. Vanguard has long been known for its low-cost investing model. Cost can have a significant impact on your overall returns, especially over the decades. Vanguard's philosophy is built around the idea that every dollar you save on fees is a dollar that stays invested, potentially growing over time. One key thing to know about Vanguard is that their team is paid strictly on salary, not on commissions. This means that they are not incentivized to push specific products just to earn a bigger paycheck. In my view, this is a big plus as it aligns the company's interest more closely with those of its clients. They focus on what's best for you as an investor, not on selling you products that you might not need. Now, there are a few drawbacks that I'd like to talk about. First, Vanguard doesn't have any physical branches, so if you're the kind of person who prefers face-to-face interactions or finds value in dropping by a local office to handle things like paperwork or check deposits, Vanguard may feel a little bit less convenient. Having said that, most transactions these days can be handled online, but for some, the lack of in-person support might be a deal breaker. Additionally, Vanguard's technology, particularly its website and app, is not as advanced as some of its competitors. While it gets the job done, it doesn't offer the most seamless experience, especially for those used to highly intuitive and responsive platforms. But if your primary concern is minimizing costs, this might be a trade-off worth making for you. For those with portfolios between $500,000 and $1 million, Vanguard offers a particularly attractive advisory option. Their personal advisor services gives you access to a dedicated certified financial planner for just 0.3% as an annual fee. That's an incredibly competitive rate for managed accounts, and it's one of the best options out there for investors in that range who want professional management without sky-high fees. Next up, let's talk about Fidelity. I spent 4 years working at Fidelity Investments, and one thing that stands out is their investment platform. It is incredibly user-friendly with a vast range of resources, making it an excellent choice for self-directed investors. If you enjoy managing your own investments but like having a strong support system behind you, Fidelity is one of the best in the business for that. Their customer service is highly regarded, and they offer robust research tools and educational content which can be invaluable if you're navigating the complexities of the market on your own. One of the biggest perks that Fidelity offers is their suite of low-cost and even no-cost investment options, including a range of commission-free ETFs and mutual funds. For DIY investors who want access to top-notch tools without breaking the bank, Fidelity is a fantastic choice. However, it's not all smooth sailing. Fidelity's wealth management services, while high quality, can be a bit on the expensive side. If you're someone looking for a hands-on guided approach to investing, their fees can add up pretty quickly. They also offer different tiers of advisory services, which can feel a bit complicated to navigate, particularly if you're new to Fidelity or just a newer investor overall. So if you prefer simplicity or have a smaller portfolio, Fidelity's wealth management side may not offer the best value for you. But for those confident in their ability to manage their own money, or even those who just need some of the best tools in the industry, Fidelity is pretty hard to beat. It's an excellent option for investors who want flexibility without sacrificing quality or service. And finally, let's talk about Charles Schwab. My time at Schwab was pretty short, but it was still a very positive experience. In many ways, Schwab is similar to Fidelity, especially when it comes to their quality of their online platform and their excellent customer service. Schwab's website and mobile app are top-notch, offering everything from basic portfolio management tools to advanced trading options for active investors. One feature that sets Schwab apart is their acquisition of the Thinkorswim trading platform, which is considered one of the best in the industry for active traders. If you are someone who enjoys frequent trading or wants access to professional-grade tools, Thinkorswim, which is integrated into Schwab's offering, is a major asset. Additionally, Schwab offers comprehensive banking services, which could be convenient if you like the idea of keeping your investments and everyday banking under one roof. There are, of course, some drawbacks. Schwab's wealth management services, much like Fidelity's, can be a bit pricey and somewhat generic. If you're looking for a more personalized, hands-on approach to managing your wealth, you may find better options elsewhere. Another downside is that Schwab doesn't automatically sweep cash into the highest yielding money market. While this might seem like a minor point, it can add up over time, especially during periods of rising interest rates where keeping cash on the sidelines means missing out on potential return. Having said that, Schwab has a very strong branch network, which could be a big plus if you prefer in-person support. If you're in Hawaii or another area with a Schwab branch, having that local access can be a real benefit. Schwab also offers excellent lending services, which makes it a strong contender for real estate investors who want to leverage their portfolios for property purchases. So, after breaking it all down, how do you choose between Vanguard, Fidelity, and Schwab? It really depends on your personal preferences and what you value most in an investment platform. If low-cost investing is your top priority and you're comfortable with a more hands-off online experience, Vanguard is pretty tough to beat. If you want a solid all-around experience with excellent customer service, in-person support, and industry-leading DIY resources and tools, Fidelity could be your best. And if you're looking for top-tier trading tools, banking services, and a versatile platform, Schwab might be the best fit for you, especially if you're looking for a local branch in Honolulu. Ultimately, the best choice comes down to your specific financial goals, how much guidance you need, and how hands-on you want to be with your investments. If you've got any questions or thoughts, drop them in the comments below. I'd love to hear from you. And if you're looking to understand your retirement journey further or would just like more advice from a trusted advisor, click the first link in the description. On that page, you'll be able to schedule a free call where I'm happy to answer any questions that you might have. Thanks for watching.